Welcome to the Daily Business and Finance Show. Capital One's Discover Financial acquisition, GlobalFoundries scores $1.5 billion chip manufacturing deal, stock market status on President's Day revealed. Super Bowl sets record for sportsbooks, U.S. companies witness 5% earnings growth in Q4, J.P. Morgan reports. Bayer cuts dividend by 95% to lower debt, hedge funds eye beleaguered Chinese stocks. China's foreign direct investment hits 30-year low, and JD.com considers bid for case sparking potential war with Elliott Investment. Stay tuned after the short ad break to delve deeper into these headlines and more. Reportedly, Capital One Financial is on the verge of an all-stock acquisition of Discover Financial Service. This information comes from the Wall Street Journal. The announcement of this deal could potentially be made on Tuesday. In this arrangement, Capital One would keep the Discover brand intact. Even though Discover saw a share gain of 15% and Capital One over 40% last year, there's no guarantee that a purchase will occur.
GlobalFoundries is poised to obtain a grant worth $1.5 billion from the U.S. government. This grant aims to boost domestic semiconductor production. The allocated funds will be channeled towards expanding its facility in New York, building a new cutting-edge fabrication plant, and upgrading its Vermont site. This investment is projected to generate more than 10,000 jobs and triple the company's production capacity.
Today, the stock, bond, and commodities markets are not operational due to President's Day. However, trading in cryptocurrency remains unaffected, with Bitcoin currently valued at $52,373. Investors are contemplating over varied economic data as they grapple with worries of either an overheated economy or a potential recession. The forthcoming earnings reports from Nvidia and Walmart this week could potentially influence sector sentiment. It's worth noting that Walmart's 3-for-1 stock split is scheduled to come into effect this coming Friday.
Wagering on the Super Bowl reached unprecedented levels this year, marking a 27% surge in crucial states such as Nevada, New Jersey, and New York. Flutter Entertainment's FanDuel experienced the most significant rise with a 43% boost to $307 million. Although gross gaming revenue margins were low because many sportsbooks supported the Kansas City Chiefs, the event was considered a success due to an influx of new patrons.
According to a recent report by J.P. Morgan, 78% of S&P 500 companies in the United States surpassed profit estimates in the fourth quarter, resulting in a 5% annual growth. However, if we exclude 7 key stocks: Alphabet, Amazon, Apple, Meta Platforms, Microsoft, Tesla, and Nvidia, there was actually a decrease in earnings per share, or EPS, by 4%. The report highlighted underperformance within the commodity and healthcare sectors. On the other hand, discretionary spending along with technology and communication services were identified as major drivers of earnings growth. Shifting focus to Europe, overall EPS saw an 8% decline, with commodities and industrials pulling down earnings.
Germany's healthcare and crop sciences giant, Bayer AG, intends to drastically reduce its dividend by 95% as a strategy to decrease debt. This reduction will result in the dividend falling from €2.40 to just 11 euro cents for the fiscal year of 2023. This decision is a response to Bayer's continuous battle with legal liabilities arising from its acquisition of Monsanto and problems related to its Roundup brand.
In the first month of the year, worldwide hedge funds experienced a gain of 1.2%. This was primarily due to net purchases of Chinese stocks, even though China's markets reported losses. According to Goldman Sachs, all strategies had a positive month, with fundamental equity long, short, and systematic managers at the forefront. However, there were variations in performance across other strategies such as credit and event-driven ones. Managers from America outperformed those from Europe and Asia. Large-cap U.S. equities saw an increase, but this was propelled by mega-cap stocks, while small to mid-cap stocks faced challenges.
In 2023, China experienced a 30-year low in foreign direct investment as a result of slower economic growth and increased global interest rates. However, the country's direct investment liabilities saw an increase by $33 billion. Foreign corporations made investments amounting to just $22 billion, representing an 82% decrease from the year before. This marked the second year in a row of decline, with factors such as COVID lockdowns and a sluggish economy playing significant roles.
The e-commerce titan from China, JD.com, is reportedly mulling over a cash proposal to take over Case, an electronics retailer based in London. This comes on the heels of Case turning down a bid from Elliott Investment Management due to what they perceived as a significant undervaluation. The buzz around this potential takeover resulted in a 33% jump in the stock value of Case, while shares of JD.com experienced a 4% dip. And that's a wrap for today's The Daily Business and Finance Show. Keep investing in your knowledge. We'll meet again tomorrow. Stay savvy, stay smart. I'm Montgomery Jones.
And I'm Amalia Dupre. Good night for now, until we cross paths again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.